Talking about positive and negative third-party confirmation letters are two different types of communication used in audit process to obtain external verification of financial information. And these two are what we are going to be looking at. So while both types serve the purpose of obtaining independent confirmation, they actually differ in their approach and nature of responses that we are going to be receiving. In this video, from GJAMES Associate Channel, Gbenga Olatunji FCA is my name. We are going to be highlighting the differences between the positive and the negative third-party confirmation letters and their respective usage. And I'd love that you just take a moment now, click like and subscribe, and when you subscribe, make sure you click that bell all so that you will not miss the next upload. Many of us, according to our statistics, have not subscribed. It is the easiest thing that you can do for us on this channel to encourage us, and please go and do it. Okay, you've done it. Let's move on. Positive confirmation letter. When we are talking about positive confirmation letter, they are actually sent to external parties with a request to respond directly to the auditor, confirming or providing other details regarding the accuracy of specific accounts, balance or balances and transactions. The recipient of a positive confirmation letter now will indicate whether the information provided is correct or providing correction if necessary, and that is why we call it positive. Let's quickly talk about more of why or what makes the positive third-party confirmation letter unique in itself. It has active response or responses. So positive confirmation requires a responder or response from the client, either to confirm the accuracy of the information we've provided, which we had gotten from our client, or to provide corrections if need be. So it involves active participation, active response. Also, it has higher level of assurance. Higher level of assurance because it provides the auditor direct address, direct link from the respondent, not from our client. That is in the hierarchy of evidence. And the last but not the least that I'm going to mention as part of key features of positive confirmation is appropriate for material balances check. So typically we can use it for large material balances, nothing material now, right? Or when there is a high risk of misstatement or fraud, as the case may be. Positive confirmation letter usage. When can we use positive confirmation letter? To verify or verification of account balance, detection of irregularities. Negative confirmation letter is what we are going to go into next. But before let me quickly flesh that one up. When we are talking about verification of account balances for positive confirmation, now auditor use positive confirmation to verify the accuracy and completeness of the account balance, like the debtors, the receivable, the bank balance, loan balances, and the like. Of course, When we are talking about irregularity, using positive confirmation letter now can help the auditor to detect potential irregularities, such as if there are fictitious sales that does not or didn't even take place, or unauthorized transaction being carried out or executed by obtaining direct confirmation from the external party. Now, what can we say or remember about positive confirmation letter before we move on to the negative confirmation letter? Put it in the comments. Let's move on to the negative confirmation letter. When we're talking about negative confirmation letters, they are actually sent to external parties with a request to respond, and these are their areas of differences. Only they are to respond only if they disagree with the information that we present in our letters to them. If the recipient does not respond, and later on we are going to see that this may be the merit of negative confirmation letter. If they do not respond within a stipulated time, which we include in our frame of letter, it could be assumed that the information is accurate and they received it well. So what are key areas and key features of negative confirmation letter? Don't forget, the positive we say is it has active response, so the negative actually has passive response. It has passive response. It requires a response only if the recipient disagrees with the information we've provided. Unlike the positive confirmation letters that wants or require them to communicate whether they agree or not. Another key feature of negative confirmation letter is that it has lower level of assurance, because they may not even respond, they are to respond if they disagree and the like. So it gives very low assurance as the lack of response actually does not necessarily indicate the accuracy of information. Probably they just have the document and just even discard it. They do not even know whether they are to write us back or the like. The letter got lost or missing along the way. Meanwhile, we've said that the recipient, if they are not responding, we assume it is this, they are saying this. So lower level of assurance. So somebody may be asking, Gbenga, which one do you use in your audit firm? As a practitioner, I use actually positive confirmation letter. It's standard in my firm. Another key feature of negative confirmation letter is appropriate for low risk balances or low balance, not large balances. So we can use it when it's appropriate for low risk, low balance. So they are immaterial and it has a reasonable expectation of receiving a response, and if we do not receive response, it's the materiality of those figures in our inclusion and consideration for the expression of our opinion will not really change or has any effect. Though I've mentioned its usage along the way, but for the purpose of clarity, these are some areas and when we can use negative confirmation letter to verify small balances, verification of small balances, low risk of misstatement areas in our financials that the client has presented to us, so we can use it. However, as we are concluding, it's important to note that the decision to use either positive or negative confirmation letter depends on the auditor's judgment, and this is why an auditor must be balanced and sound in mind. Considering factors such as materiality, we need to know our client to be able to decide on that. Risk assessments, we must have conducted that, and specific circumstances of the audit engagement. Auditors must carefully assess the appropriateness of each type based on the objective of the audit and the level of assurance that we require, especially if the engagement is not a pure audit engagement. Maybe it's a review engagement and some other assurance engagements. Then it helps, the knowledge of this will help us to decide whether to use positive or negative. But as a standard, I'd let you know the one I actually go for, and the reason is better. Of course, judgment comes in again, right? Overall, while positive confirmation provides more direct and reliable evidence, negative confirmation can be a practical and cost-effective approach to certain types of balances, especially those that have low risk scenarios. From GJAMES Associate Channel, Gbenga Olatunji FCA. Don't forget to like, comment, share. We are value to life. We are value to your businesses.